Hi, this is Lee Phillips. I want to talk to you about the 199A deduction. It's a big deal, guys. It was originally in the Tax Cuts and Jobs Act back, 2017, but it's been made permanent in the Big Beautiful Bill, or One Big Beautiful Bill, or whatever you want to talk about it as. I want my friend, my associate, Walker, to walk you through this. And if you have questions, we have everybody here that can answer the tax questions. Walker is a enrolled agent. You don't use a CPA to do your taxes. You use an enrolled agent. He's an enrolled agent. He's got a master's in tax, the whole 9 yards. Anyway, Walker, take over and tell us about 199A.
So the 199A deduction, simply put, is a 20% deduction of your business profit. So if your business makes $100,000, then the simple application would be you receive a $20,000 deduction. And this deduction is available for business owners. It's available if you own your S Corp, you own a partnership, a sole proprietorship. Even on your rental properties, this deduction is available, although the nice thing about real estate is you rarely have a profit due to depreciation. But if you did have a profit, even after accounting for depreciation, then you could be eligible for this deduction as well. And that's something that we can look at one-on-one and apply it to your individual circumstance. But by and large, if you own a business, then you should be eligible for this deduction if your business has a profit. A simple example, again, is if you're married and your income is less than $400,000 or single and your income is less than $200,000, then you can calculate this deduction very simply with just your business income. And that 20% deduction does not have any wage or income limitations like we'll see on the next slides. So in this example, you own your business, you personally have $300,000 of income, the business made $200,000, your 199A deduction will be $40,000, which is 20% of the $200,000 business income. So not a very difficult calculation if your total income is below these thresholds right here. Now, like I mentioned, this deduction can be limited if your income is above $400,000 if you're married, or $200,000 if you're single. And that above those thresholds, this deduction starts to get phased out, and you could receive less of a deduction depending on how much wages you've paid out and depending on what type of business you own. Now, don't ask me why, but the IRS, Congress, when the Tax Cuts and Jobs Act was passed, they stated that specified service trades or businesses, so doctors, lawyers, accountants, professional athletes, they don't create a lot of jobs, and as a result, they should not be entitled to this deduction, because part of the purpose of the Tax Cuts and Jobs Act was to create jobs. And so the industries that Congress doesn't feel like creates enough jobs, they do not get the full benefit of some of these deductions. But again, the 199A deduction, it has limitations, and if your income is above a certain threshold, then you need to be really mindful of how much wages you're paying out so that you can maximize your deductions. So in this next example, if your income is above $545,000 or $550,000-ish if you're married, or $275,000 if you're single, unless you pay out a sufficient wage, your deduction gets phased out. So again, if your income is between $400,000 if you're married filing joint and about $550,000, then you can still get some deduction regardless of the wages that you pay out. But if you're above that amount, you don't get any 199A deduction, even if you don't pay out a wage. So in this example, if the business income is $400,000 and the taxable income is $600,000, if we look at the three scenarios, we'll calculate what the 199A deduction will be. If the company paid 0 wages, then the 199A deduction is 0. If the company paid $40,000 of wages, then the 199A deduction is $20,000, because that deduction above this threshold is the lesser of 50% of your wages or 20% of your business income. And then in the third example, if the company pays $200,000 in wages, the 199A deduction is $80,000, because once again, this deduction is limited to the lesser of 50% of your wages or 20% of your business income.
Thank you, Walker. We appreciate you taking care of us on 199A. It's a big deal, guys. Walker and Ben, they work together. They hold up the tax company that I work with. Lawyers and accountants can't be in the same company together. So they take care of the tax stuff. I take care of the asset protection, the legal stuff. But remember, the IRS is your biggest asset protection threat. They will sit you down, call my office, 801-802-9020, and they will sit down with you, spend 15 minutes, and even look at your last year's tax return. Call, make an appointment at the office, and they're willing to help you out. Frankly, you're stupid not to take advantage of this. Now, if you're just paying $2,000 in taxes, forget about it. But if you have a little company, you're a big-time real estate investor, they can save you, the goal's 20% on your taxes. Yeah, 199A is 20%, but they're going to save you 20% on everything too. So we can cut your taxes substantially, guys. Don't forget to love us and like us and do all of that sort of stuff. Register or subscribe and below. And do give us a call, 801-802-9020. And you might as well sit down and spend a minute with them. They charge $500 for the service, but they've agreed to take care of my YouTube subscribers. This is Lee Phillips. We'll catch you later.